Hey, how are you
Hey,
guys? All right, Dustin, this is it. We're doing it.
we're doing it.
This is the first episode of the Buy Hold Rant podcast. I keep calling it Buy Sell Rant, but we gotta make sure that we get the title right at least. Yeah, how are you doing, Dustin?
I'm good. I'm just bewildered that you had this
Oh,
idea.
hold on.
Well,
We got a little delay. This first time live issues. I was
oh,
actually
because
on
you had the
YouTube.
tab open. Yeah,
Yes. I was hearing
funny.
myself. I'm like, wait, why am I talking to myself? But anyway,
No, I was
uh,
just saying I was shocked that you had the idea for this podcast last week, and
yeah,
here we are doing the podcast this week.
yeah, and we did literally nothing for it last week. We started Monday, and then
Yeah.
I contacted Adrian, who's our producer, who's on this call. Adrian, say hello so they can hear your voice.
Hey, everybody.
The voice of
And we've
God.
been frantically trying to. Hey, Adrian. We've been frantically trying to learn the tools for streaming, for figuring out podcasting, all this stuff, and bringing it alive by Wednesday at 4 p.m. Eastern. So the market's just closed, and we have so much to talk about. So, Dustin, I think you are setting the agenda for us, right?
I guess I am. I mean, while we're having, I guess that's why I'm here. While we're having earnings roll in, I figured we would first talk about your portfolio and a big purchase you made. I think it was this week or last week.
Monday, yeah.
Yeah.
I finally decided over the weekend. We let me switch over to my portfolio. Okay, so American Eagle is the purchase I made on Monday. Over the weekend, I did the research about. First of all, you couldn't not see the Sydney Sweeney ad everywhere. It seems like everyone's talking about it. People are either outraged and think that American Eagle and Sydney Sweeney are Nazis, or and they're talking about it as a result of that, or they're on the other side, they think that she's the most wholesome thing and this is the most wholesome ad, and they're talking about it because they're defending American Eagle. In the meantime, American Eagle has become a household brand that like just has total brand recognition, and I suspect that the vast majority of people are looking at this ad and surprised at the outrage. So I started looking into the company. The company is actually pretty solid. They've had, if we look at sort of like their earnings history, they have pretty solid earnings that have been growing over the past, let's say, 4 years or so. Most recently, they've been on a sort of relative decline, right? So their Q4 earnings were down compared to the previous Q4 of 2023. But this is part of the reason why they're launching a new ad campaign with Sydney Sweeney. And the ad campaign, by all sort of typical ad measures, is one of the most successful ad campaigns of all time. And when I was looking at their sort of details and numbers, they actually, let's go to Earnings Hub to look at some of that stuff. They are actually not very expensive. A PE of 11, a price sales ratio of 0.4. Yes, their revenue hasn't been growing and their EPS hasn't been growing, but even with a declining EPS, their price earnings ratio is still pretty low. So if this ad converts for them, which all indications seem like it is, because Sydney Sweeney jeans are sold out on their website, they could easily have pretty substantial increases in revenue, which would lead to pretty heavy increases in profits. And the stock is cheap even without this controversy going on. So what are your thoughts, Dustin? What do you think about it?
Yeah. So I think you're spot on with majority of this. I do have a big concern about American Eagle,
Okay.
and it's the price history. So you're right, like around $10 a share is basically what the low has been since the stock has been public, since 2006, 2005. So it's been
Right.
on the market for around like 20 years. But the problem is it's been oscillating the whole time. It just goes basically between $10 and $30.
Right. Right.
So for a normal investor, that's a great opportunity, right? You're buying low, you can maybe make a couple multiples. The problem is you're too good, right? Where the stocks you're picking are doing much better than 2 or 3x, right? And conservatively on the upside, this is doing maybe like a 2x. So I think opportunity cost for you in particular, this might not hit the mark.
But the way I look at my stock investments is that my expectations is not for things to go up the way Robinhood or Rocket Lab have in the past year. That's just sort of like the exception. It's not the rule. So I don't expect American Eagle to sort of 5x from here in the next year. I do expect that they could have, upside of, I don't know, 50 to 100% over the next year, which would be incredible returns, right? And that is going to reflect based on how they execute. And do they take this controversy and like double down on it, or do they back away from it? Do they, do another ad campaign where they use Simone Biles or somebody on the equivalent of a Simone Biles and say Simone Biles has great genes, right? And then like, what's the extreme left going to say? Yes, damn right, she does have great genes. Like, what are they going to complain about if they use Simone Biles rather than a blonde hair, blue-eyed person, right? The controversy, and then they could keep the controversy going as a result of the left not saying anything, right? So it could be one of those things that really puts them on the map. It certainly has overnight. When you look at sort of American Eagle's search trends on Google, having quadrupled basically overnight, it's pretty incredible. So that's kind of what I'm excited about, is that it has the ability to stay sustained. Now, if this stock was already trading at its highs, then I would probably, and like maybe a PE of 20 or 30 when the industry is closer to a PE of between 10 and 15, then I would be more worried. But the fact that it's already trading at relatively low PE, relatively low price sales ratio, and now all of a sudden has this amazing ad campaign going for it with the product being sold out, essentially, it's like, all right, I could see this thing actually having legs for the next few years. And if they capitalize on it, which, by the way, the CEO, one of the things that I care about the most is who is the CEO? Is it founder run? And this is basically a founder. He's not technically the founder, but he's been running the company and built the company for the past 30 years. And he happens to be Jewish American, by the way. So the whole Nazi sort of label that they're trying to put on him doesn't like really stick when the person has that kind of a background, right? He's a 70-year-old Jewish American, right? So,
well, yeah, it's a crazy claim. I mean, yeah. I partially think that there's like it's conspiracy, right? Like, I just don't see people really being outraged by this, and like it's more likely that it's just AI bots, right? That are fueling the fire, and then that creates a real controversy, right? Because then people see that idea and they just buy into it without really thinking it through. Of like, does this even make sense?
Yeah. What triggered me to actually look into it, was the Daily Show running a segment on it where they were showing all the outrage of all the other sort of like people outraged. And then they were sort of making fun of the right being outraged at the outrage of the left. So, I was like, okay, this just does not seem outrage worthy, and therefore it's beneficial to American Eagle. So stock, of course, right before I bought it, Trump tweeted about it and shot up 20%. So I ended up getting it at a higher price than I had expected over the weekend, because it was at like 1070, and I ended up getting it closer to 1240 or something like that. But I think it still has plenty of room, assuming they execute, assuming their numbers are good. So,
I mean, the other thing for American Eagle is there is precedent in this space in regards to Abercrombie, right? Like they had a huge run up, which let me see if I can pull up here. Not saying they're going to do the same thing. And again, I'm more, I don't know, conservative in regards to like what American Eagle could actually do.
Right.
But they had this massive run up of going from $15, $20 all the way to almost $200, not quite hitting it. So
yeah,
it is possible. And if you look at the history before that giant run up, like the top was 50.
Right.
So you never really know.
Okay. While we were talking, I just noticed that Bumble's earnings are out, And top line is up 1%, but bottom line misses by minus 744%. It's like minus $2.45. So I'm sure that there's some kind of one-time thing in there somewhere. It'll be interesting to get into the details of Bumble, but that's a super interesting number, minus $2.45. I wonder what's going on there. So
Yeah, and the stock's not down that much. So
in fact, the stock went up above 8 for a second before it went back down. So there's probably good news in there somewhere. We'll have to dig into that possibly later. But there's been so much earnings this week. Holy cow! Like Palantir reported on Monday, they had killer numbers. Axon, which just had amazing numbers, had a huge run up. I think they went up 20% yesterday.
yeah, wow.
Or close to, or maybe 15% in the past week. So in one day they had a pretty good run up. Palantir also jumped quite a bit after their earnings. They were at 160 before earnings, and they're like close to 180 now. HIMS reported earnings and seems to have been disappointing because they're now trading roughly down 15% for the week. Go ahead.
Yeah, if you look at HIM's revenue chart, I think that kind of tells the story why. Where it had this beautiful exponential run to it, and now all of a sudden
It's
this
a down
earnings
quarter.
and next earnings, it looks like it's not on that trend anymore. So
Yeah,
I think that maybe spooked investors.
Yeah. Are you seeing my screen, by the way, Dustin?
Yeah.
That I could see that spooking anybody. So if Palantir ever has a quarter like this, by the way, oh man, I would be worried. And then yesterday, a couple of my holdings reported. So SMCI was one of them, which the stock is down quite a bit, 20% in the past week, but most of it just because since yesterday, they were trading at 57, down about $10 since yesterday before close. And their earnings were actually not crazy bad. Their revenue was a miss by 3%, 5.7 billion, but up compared to last year quite a bit. So this would have been the quarter to compare it to. Oh wait, actually, this would have been the quarter to compare it to last year. So up from 5.3 billion to 5.7. And then
the revenue was still in line with their guidance. It only missed expectations, but
that's right.
Yeah.
And then their profits beat barely. But I think the company is still in a pretty good position, and they're guiding revenue for next quarter between 6 and 7 billion. So it should be a record quarter for them next quarter, and they expect sort of profitability and margins to improve going forward. Now, what excites me about SMCI is that the data center buildouts are continuing and accelerating by all the big names, whether it's Meta or Google or Amazon or Apple or XAI or Tesla. They're all building more data centers using more NVIDIA or GPU chips, and they need cooling systems and power and cabinets and products that basically Supermicro is in a great position to deliver on. And I just don't see how this company is going to, their revenues are going to go down unless they continue to fumble in some way. The part that I hesitate about SMCI is that their founder CEO is very difficult to understand. I'm not sure he has the charisma and ability to rally the best talent around him. So that part is sort of a negative. I listened to the call yesterday. Half the words that he was saying felt like I did not understand them, or he was just saying the wrong things. And his English is not the greatest, unfortunately. So that's my hesitation there. And of course, their history with sort of accounting issues is not ideal. But the price reaction since yesterday seems like a little overblown to me. So I'm going to hold on to it and see what happens from here.
Yeah, I think the accounting issues is the opportunity here, because if they didn't have that, the stock would be exponentially more expensive.
Right. Absolutely. Absolutely. And they've had other auditors go in and say, like, no, the management is sort of like, right. Management has stood behind their numbers. They did put in sort of better practices for accounting. So all of those things should improve going forward. The fact that everybody is just spending hundreds of billions of dollars on these data centers is kind of the thing that is exciting about SMCI. So so not doing anything there, but not adding anymore either, because you know, if the founder was articulate and spoke well, I would be all over that company. But unfortunately, that's not the case. So we're going to pass there. All right, what else we got? Rivian,
Uber,
yeah. So let me switch to Rivian real quick. Where is my screen? Yeah, so Rivian reported yesterday, and they did not surprise in any significant way. The surprise to me on Rivian was on July 2nd when they released their production and delivery numbers, and they seemed like they were way below what I would have hoped as a shareholder. But actually, their cash burn was not ridiculous. It's not going in the wrong direction. They took in $1 billion investment from VW at $19 a share. So VW is paying a huge premium for Rivian shares to give them $1 billion or to buy $1 billion worth of shares, and that billion gets added to their cash essentially. So their cash position, it's now $7.5 billion, is super strong. The management team, including RJ, reiterated the R2 line being on track to launch in 2026. They reiterated in the Q&A section where analysts are concerned whether or not they can make money on the R2 line at a starting point of $45,000, and they reiterated that they can, and that the cost of the R2 is roughly half the cost of the R1 line, and that's contractually the case based on all the parts that go and make up the R2. RJ also said that the R2 pre-production line is pumping out these cars, and he's been driving them and testing them and is loving them. What have you seen the R2, by the way, Dustin?
I haven't seen it in person, but I've seen it online, obviously, in addition with like the R3. I think if they can get the cost down, and it seems like they will, it's definitely more promising than the R1. And it's just a question of like, can they survive long enough, right? And do they have enough cash, which I know you believe they do.
Yeah, so they're burning. I don't remember the exact amount that they burned, but it's hundreds of millions of dollars per quarter, which is obviously never great when companies burning several hundred million dollars a quarter. But even if they were burning $1 billion, which they're not, that would give them roughly 8 quarters or 2 years to sort of get to profitability, assuming they never even reduce their burn. So their runway to execute is pretty long, and the fact that they expect to have this thing out within the next year and likely ramped up before the end of next year is going to be fantastic for them. And I think that they have an opportunity to have the number 2 selling EV in the country after the Model Y. And if they can sell a couple 100,000 of these R2 products, Rivian could become a profitable company. Now, what I love about Rivian is that the entire company, despite the fact that it has 3 products that people absolutely love, the R1 truck, the R1 SUV, and the Amazon delivery van, which is now being sold to other places as well. All 3 products, and I've surveyed a variety of different, anecdotally, owners of these cars or drivers of Amazon. I literally harass every driver of Amazon driving.
I'm sure they love that.
Yeah, I'm like, hey, what do you think of this versus the gas ones? And they universally have all loved the Rivian over the gas-powered ones, the delivery vans. So they have customers that love their products. They have a strategy that's very similar to Tesla's in that they are building the full stack. They have the software tech, the battery tech. They're building their own charging network. They are doing their own software, but also their own hardware with the electronics components of the cars. They have a shot at being the number 2 EV company, at least in the US, possibly in the world, but at a $14 billion valuation, and today's valuation is even lower. What is it? 13.9, which is close to $14 billion valuation. They have a shot at easily becoming a multi-$100 billion company in comparison to Tesla, which is over $1 trillion company. And people believe Tesla will be worth even more because of the robotaxis and other things. By the way, Rivian, I don't know if you know this, has their AI and autonomy day coming up in December. Did you know about that?
I didn't know that. No, I didn't hear about it.
Okay, so they're literally following Tesla's footsteps in that, they're also working on autonomy. All their vehicles have the camera systems that are higher resolution cameras than Teslas have in them. And they also have hardware using NVIDIA chips that is capable of doing all the inference for driving, self-driving, similar to Tesla vehicles. So they have all the hardware, all the camera systems, and they also have radar in their systems as well. So
radar like LiDAR?
No, they specifically say radar, not they don't use the word LiDAR. So I think it's mainly to detect things in front of the car that vision might not be able to see. And if they don't need it, they could always drop the use of that. So it might not be a big deal.
And the lack of self-driving, that's what's really holding you back from buying a Rivian, right?
Yeah, if they had self-driving, I'd already be a Rivian driver.
Yeah, because that's a big question mark for me, is if they can nail the self-driving, which is a big if, but obviously they're going to focus on it. How many people will convert from Tesla to Rivian?
Right. There's another factor, which is that if Google, if Uber, if anybody wants to really compete with Tesla on robotaxis, they need their own vehicles and technology and full stack again in order to compete with Tesla, with robotaxis. There's no other way to do it. So if a Google decides that, Tesla is going to destroy us unless we own the full stack, they have to go out there and buy something, right? What are they going to buy? Jaguar? Maybe. But
well, they work with Jaguar,
yeah. But I think Rivian would be a much better potential buying opportunity for Google.
Absolutely, and Rivian just partnered with Google on doing a Google Maps integration.
Yeah, they have way better technology than anyone else except for Tesla, right? That's why VW is partnered with them. So super bullish on Rivian still. Obviously disappointed about their quarterly results. I mean, I want to see their numbers go up on deliveries and production every quarter, but the real bet on Rivian is all about the R2 line. So that should be interesting.
Yeah, my take is the earnings really just don't matter until R2 is
live.
Exactly.
Yeah. All right, we had Uber this morning reporting, and what their stock do? Basically ended flat-ish.
Yeah, it was very flat, and I think earnings were pretty in line with expectations, if I remember correctly.
Yeah. So Uber, I've loved Uber, been an Uber owner of the stock since it was about $20 a share, and I sold my last shares at just over 90. I think it was around 92. My problem with Uber, which I think is a great company, by the way. I think it's executed exceptionally well under Dara, who's been the CEO. But to me, Uber is BlackBerry. I don't know. What are your thoughts on Uber being, me comparing them to BlackBerry of post iPhone launch? I think they're going to have their best few years in the next few years, but then once robotaxis take over, I think Uber is not in the greatest position.
I think that's fair. I don't know if BlackBerry is an exact one-to-one comparison, because the iPhone technology was proven in there, right? It was very obvious touchscreens were the future, where it's not necessarily a foregone conclusion that AI or autonomous driving is the future, even though we obviously speculate that it is.
Oh, well, I would say that there was a lot of controversy when iPhone came out without a keyboard. Everyone was like, there's no way you can sell a smartphone without a keyboard. BlackBerry users were like, without the keyboard, it's not a useful smartphone. So the keyboard
Right,
was
but
a pretty big thing for them.
yeah, it was, but the BlackBerry chose to not innovate after iPhone already launched and they were getting a bunch of users and people were like, oh, the keyboard is fine, right? Like, no,
Right,
that
right.
hasn't happened yet where we haven't seen the competition. Like, obviously there's Waymo in Arizona and things like that,
Right.
but like we haven't seen the big push from a user standpoint to prefer autonomous driving.
Ooh, okay. Is that because there aren't enough of the vehicles, or is that because
I think the tech's just not there yet, right?
well, I mean, Waymo would say otherwise in Phoenix, right? Like,
Well, in Phoenix where it's sunny every day.
but I guess the question is, do people prefer Waymos over Ubers? And
I do whenever I visit
you do. Okay, why do you prefer Waymo over Uber, or
because I'm an
over
introvert and I hate talking to people. It's a wonder why I'm doing this podcast.
well, you're only
No,
talking
it's
to me.
right. I'm only talking to you, and my 1,000 friends listening. Yeah, no, I think in theory also it's safer, right? Like if you could
And
step
it
back
should
from
be
like
cheaper. It should also be cheaper for the car.
which I don't think it is at the moment.
Right,
But you're right. It should be a lot cheaper.
which is a
But
mistake.
I agree. But even if it starts out cheaper, I would assume they would just price out, Uber, and then once Uber's dead, they would just raise the prices back to what Uber was. So I
I
don't
think
know.
that's exactly what Tesla is going to do. And what's funny
Yeah.
is that, like, Waymo should have done that without Uber. So I have a huge rant about Google and Waymo because I think that Google is being run very, very poorly. One of the things is that they have two CEOs on Waymo, who then report to Sundar Pichai, who himself is making a huge set of mistakes on AI and a bunch of other things. This is called a rant, by the way, for a reason. Buy Hold Rant.
Emphasis on
Because I have
rant.
lots of rants. But no, I think that Waymo has been too slow to execute. They haven't rolled out fast enough to new cities. They've been doing this for more than 4 years, if I'm not mistaken. And they're pricing it at a higher price than driver-based cars that Uber provides. And they've partnered with Uber to deliver them. So, like, I think they're making all the mistakes, essentially, that one could possibly make trying to do self-driving. So Waymo is missing it, whereas like Tesla is not making any of those mistakes. They got the full stack themselves. They built their own app. They have the lowest priced vehicles, and they're underpricing Uber. So why wouldn't you take a Robotaxi from Tesla and over Waymo if you could, right? So anyway,
but it needs to be available, and right now
but
it's only Texas, I think.
no, they just launched in San Francisco Bay Area as well.
Oh, they did.
Yeah, and they're about to launch in Phoenix, and I believe they have like 4 or 5 other cities that's sort of like they're pushing hard to launch under. So unless other companies move fast, I think Tesla is going to take over the robotaxi industry. It feels like a foregone conclusion.
So then, if that's the case, why don't own Tesla? Because I know you used to own it.
Okay, so one of the big things in my investment thesis is that valuations matter, and this is $100 billion company that's being car company right now. $100 billion of revenue is mostly coming from cars. I think something like over 90% of it is coming from cars, and it's being valued at more than 10 times its car sales, which normally a car company is getting 1 time or sometimes less than 1 time car sales. So the $1 trillion market cap is where I have a problem, right? Because I think that, like, even if they're successful with robotaxis over the next 3 years and they have $5 billion of revenue from robotaxis in 3 years, which would be pretty incredible achievement, that $5 billion would be a 5% increase in revenue, and maybe contribute $1 billion or $2 billion to the bottom line. That just is not going to move the needle for such a ginormous company. So I think there's time still for Tesla investors to lose patience, which
Right.
Wall Street generally is not the hardest part of investing is having patience, right? Like stock goes down
yeah.
20%, you're like, fuck this, I'm gonna sell. Um, as I feel right now about SMCI, but I'm not doing it. The patience is difficult, but that is the hardest part about investing.
Yeah. Switching gears, pun intended, pun very intended. We did
Okay.
have a listener comment that Bumble is tanking, apparently.
Oh,
So,
is it?
Yeah. You might want to check
Might
that
have to
out.
buy more. Well, it depends on
How
what
much
they
it's
say.
tanking,
Yeah.
what the definition of tank is.
I have to listen, of course, to the call to see what Whitney says. So far, I've been pretty impressed by her. She's come in, cut costs. Their top line revenue sort of like hitting the mark with 200 and what was it? 248 million in revenue. Means they're not, the estimate was 245. So that means they're not actually like declining super fast. This is a company that has roughly $1 billion of revenue. And I suspect the $2.45 EPS loss is due to a one-time charge of some kind, right?
Right.
They're probably, I can't actually speculate on it. So I'm gonna hold off speculating, but I'm gonna listen to the call and I'll do a summary via a comment on my portfolio as to whether or not I like them even more now or less, or maybe I won't be making any trades on them. Who knows? But
they're down 13% after hours to $6.68 a share.
Oh, are they on? Okay, yeah, we're actually showing that. Yeah, 668, down almost $1. So we'll see what she says on the call. That'll be interesting for sure.
And this is the second quarter since she's been back, or the first?
So she came back March 17th. So technically the first full quarter. Okay. But she was on the last quarterly call. I love the cost cutting. I love this sort of refocus on making the product great again. She's the person. So the reason I like Bumble is the founder is the person behind two of the largest dating apps in the world, Tinder and Bumble. So that's just no coincidence. And of course, she got fired from Tinder over sexual harassment issues. So she was the one being sexually harassed, and then ended up creating Bumble, which ended up being the sort of number one dating app for a long time. And even now it's like in the top 2 or top 3 between Hinge, which is owned by Match Group, Tinder, and Bumble. Now, here's the reasons why I'm excited, in case anybody doesn't know why I'm excited about Bumble. It's mainly because of the market cap being under one-time sales. So when we look at sort of like the market cap of Bumble, and we're seeing it as like 0.8 times, and if the price goes down, it's going to be even more attractive. 0.8 times sales. This is a company that can easily squeeze out a couple $100 million of profits, if not $300 million of profits from $1 billion of sales. So the profitability potential of this company is enormous. Now, when we compare this to Match, so let's pull up Match real quick. Match's market cap is roughly $9 billion on $3.5 billion in sales. So their price sales ratio is 2.4. And they're also not growing, by the way. So when you look at Match revenue, like let's hide the estimates, you can kind of see they're basically in the same boat as Bumble in terms of like their revenue not growing, in fact, being down year over year, almost identical to Bumble, except Match is not run by its founder, because they have a bunch of different products that was created by different people, run by a professional CEO. So in my view, Match is less likely to fix its problems and grow revenue than Bumble is. But even then, it's being valued at 2.4 times sales versus Bumble, which is at 0.8 times, roughly 3 times cheaper for Bumble on a per dollar of revenue basis. So if Bumble was to be valued similarly to Match, it should be roughly a $20 stock. That's, again, my opinion. And it's being traded at around $7, right? So that's what's attractive to me about Bumble. Now, what is hurting Bumble in the short term is these one-time issues that is causing EPS to be minus $2.45. I don't know what the reason for this is, but believe me, I'll find out by the end of the day, and I'll write about it. But
sounds like a threat.
Yeah, stay tuned. Anyway, so yeah. Did you end up buying some Bumble as well, or have you stayed away from it?
It's a good question. So I did not buy Bumble in my personal portfolio because I just don't love the dating app space, and I just don't know that world enough. I believe in the opportunity though. Like if I had to choose between American Eagle and Bumble, I would choose Bumble easily.
Oh, really? Okay.
Yeah, 100%.
You believe in American Eagle even less than the dating app, or like the retail world even less than the dating app?
Sydney Sweeney has great genes. I just don't think American Eagle. I don't know. I think it's the price history is a big issue for me.
Okay.
But my son has a portfolio that I manage, and I had him buy Bumble. So I believe in it enough.
How old your son is, because
he's 2.5.
Okay.
He's 2.5. So by the time he is ready to use Bumble, hopefully he'll be a millionaire with shares of Bumble.
Why is your son so bullish on Bumble?
It's because I view his portfolio as like higher risk, and I view Bumble as to me a higher risk play. And my portfolio is pretty high risk too. It's just like I don't. For me, it didn't work with what I'm trying to do. But for his portfolio, I think it made more sense.
Okay, I was going to say your portfolio is what I would consider higher risk than even mine. You're like heavily into crypto.
Here, I'll show my portfolio. Well, it's only high risk if you don't believe in it, right?
Yes, and if you believe the numbers.
I mean, what I will say in regards to like risk and comparing our two portfolios, your portfolio has very much outpaced mine. But when we started Savvy Trader and it was more of a mild bear market, my portfolio was doing better than yours.
Okay.
And I would think if we were to go into another bear market, my portfolio would potentially hold better than yours would.
Okay.
So, but we won't know until we get there.
No, I mean, that's fair. That's fair. But the way I look at it is that I'm about to run out of luck at any given moment. So, I feel like I've been lucky for more than 20 years now. And, people are sometimes a little overly excited about investing in the stuff that I'm invested in. And I'm like, you never know. Past performance never guarantees future results. Anyway, let's move on. What else do we have to talk about?
I did want to touch on Shopify.
About
my portfolio.
Yeah.
Also, because Shopify reported earnings this morning.
Great company.
And it was a great earnings report. They were up 20% for the day. And I took that opportunity to sell some Shopify shares. So
honestly, I don't see that as a bad thing. Like, because you got to take profits when the price is like going up like that, because now it's PE is 91. This is not a tiny little company where it can, double and quadruple revenues very easily, right? 91 is pretty high PE, price sales ratio of 16. So, when you look at its market cap of 200 billion, taking some profits off the table here is probably a good thing.
Yeah, I mean, my strategy for Shopify, again, this is going to make it seem like I really look at price history, which I do, but like, it's a similar thing where I bought majority of my position, and you could see from the green indicator over here. I bought majority of my position after the COVID run up, or after the like 2021, 2022 run up, like that crazy bull market. And it went back down to its COVID lows. And it was like, this is a major company. If you're selling a product online, a physical product online, you're either going through Amazon, Shopify, or both. So like this company, it was just totally underpriced. But now after 3 years, 3.5 years, it's slowly going back up to its all-time highs during the 2021, 2022 bull run. So just as it approaches that point, I'm kind of exiting the position, and I'm also trying to build up my cash position because I don't have enough cash in my portfolio. It's only at 3% right now. So that's kind of my POV. And I'm not saying it can't, blow past its all-time highs, but that's kind of like where my target is.
No, that makes sense. We have another company reporting tomorrow, which I'm super excited about, which is Rocket Lab. Okay, so Rocket Lab is expected to have 135 million in revenue, and I think it'll probably be right in line with its revenue estimate. It might beat it. It did have like 5 launches of Electron, and each one of those launches is roughly 7 or 8 million in revenue, and they were anticipating 4 launches. So there's a chance it might beat their revenue estimate by like 8 million, 7 or 8 million. But the much more exciting opportunity for Rocket Lab is when their Neutron goes online and all of the satellite capabilities that they're building in-house. And when you look at this sort of like revenue growth curve on this company, if we hide the estimates, you can kind of see they've been consistently growing at 60-70% year over year. And their reusable rocket is about to launch next year. And this company is essentially second to SpaceX with only a $20 billion valuation. So it has a pretty high price sales ratio now of like 46. So it's not a cheap stock anymore. When it was a $3 billion company, it just was a no-brainer. And literally it was a $3 billion company a year ago, which is unbelievable. But even at 21 billion, it's not crazy expensive relative to how big the space industry is, right? So that's what I love about Rocket Lab. Looking forward to their earnings tomorrow. So we'll see what happens there. But so far, this earnings season has not been good for my portfolio, with the exception of Meta, which killed it, knocked it out of the park. But
right. We've had a couple of listeners reach out asking for your take on quantum stocks.
Oh, I feel like quantum is absolutely over my head. I do not understand quantum computing.
I don't think the experts understand it either.
Yeah, I mean, I honestly do not know what that means. Like that we need a million qubits. We're at like 1,000 qubits. Like I don't know what qubits are. Every time I've like listened to hours and hours, I've read hours and hours of material, I don't understand it. I don't even. It feels to me like even the people who are explaining it don't even understand what's going on. So I have no idea how quantum computing is going to come about, and that doesn't mean it's not going to be absolutely amazing and it's just not going to completely crush it. But how do I make investment decisions based on that? I don't know what the revenue opportunity is. I don't know any of it. And it seems like if it is going to come about, it's probably going to come about in one of the large companies like Google or.
That's what I was going to say. Is you do have some exposure in your portfolio from being invested in Google.
Yeah, and what are they? I mean, they also talk about how like a quantum computer just recently solved the problem that would have taken 13 gazillion years to solve by traditional computers or whatever. I'm like, who double checked their answer? And what was the problem that they solved? Was it useful? Like, what do we know about this? If it was a hard enough problem to where we didn't know the answer, then how do we know the answer is right? Like, right? Like it's just too many layers of problems for me.
Right.
So I will pass on anything I don't fully understand. I also don't invest in a lot of hype, which is why I passed on Fig, IPO.
Yeah, we could talk about that. Do you have any other thoughts on Figma or the design space? I know I do.
Well, you use Figma, don't you?
I do use Figma. I use Figma. I also use Sketch, which used to be like the design tool king. And now Figma is the king. Because what Figma did is they added the ability to create designs with multiple people at once, like basically bring the Google Doc functionality over to the design world, which is great for, I would say, majority of use cases, but I tend to work on small teams, so it never really did anything for me.
Okay.
Because I'm just working in my own little silo. And I actually think that Sketch is a better product. Like, I think it just works better and it's smoother. Sketch is like a direct Mac app as opposed to Figma is built through the web. But regardless of that, that's not why I'm bearish on Figma. The reason why I'm bearish on Figma is in the limited time I've been in the design world, there has been multiple kings, right? Where it used to be Photoshop, then Sketch, then Figma. These kings have no moat.
Yeah. Okay.
Exactly.
Yeah.
Yes. There's absolutely no moat. So the question is, who's going to be the next product?
Right.
And what's going to be the killer feature? So
I just don't AI-based one where you just talk to it to design everything you want.
Or you're not going to design anything. You're just everything's going to be built. You know?
Right. Well, you're gonna you have to say something, right? Like,
yeah. But like, there's a world where you're using mock-ups less and less potentially to communicate your ideas, because that's what it really is you want to communicate your ideas effectively so everyone understands what you're building. But if it's super easy to build stuff and you could just be like, oh, I want a page with a button here that does X, Y, and Z, and you could just build a prototype, that could be the future.
Yeah. And then also, like, on the IPO side of things, I think I've seen countless IPOs where there've been high flyers on the day of, and then within days or weeks or months, you can buy them for significantly lower than their original IPO price. And that has happened for Meta and Twitter and Uber. And so every high flyer company, Robinhood, you named it high flyer company, you could buy it in the weeks later for less than
later. Yeah. The one company that did hold strong for a while was the last big IPO, Circle.
Okay.
I believe
that wasn't even on my radar.
Yeah. They're like the biggest regulated stablecoin.
Crypto. Yeah. Okay.
Yeah.
I feel like that's another world where, like, the valuations make absolutely no sense. But
yeah, I haven't looked into their value, like what their actual valuation is, too much. I'm not a big believer in the stablecoin space. I just don't. And I'm a crypto guy. I mainly own Bitcoin and Ethereum in my portfolio, and I just don't understand the benefit of stablecoins. Like, no one's been able to clearly articulate that to me. And maybe, and it's very likely I'm missing something, but I'll say this: if the stablecoin space is going to have about a positive outcome, Circle is where I would want to be. They're like the second largest stablecoin,
right,
and they're the most regulated, which I like. But I just don't get it, so I'm staying away.
No, makes sense. Very cool. Do we have any other topics, or is this a wrap, Dustin?
I mean, there's a couple people in the chat asking about specific stocks. I don't know if you want to get into that or if you want to.
Yeah, if you have them handy, let's do it. Yes. Plug in my computer, but I'm like down to.
Don't die on me.
No,
don't die on me. I can't do this on my own.
But that would be a wrap if my computer goes.
Oh yeah. We had a listener ask about what we thought on Reddit.
Oh,
talking about IPOs.
Yeah. So that's a company that's done pretty well, if I'm not mistaken. I haven't been following their stock closely.
It has done well, yeah.
I have never been able to be a Reddit user, unfortunately. Like, to me, it just seemed like very unorganized, just super difficult to follow Reddit threads. I haven't been a fan of the product, and therefore I never really even looked into the company to invest in them. But yeah, the stock looks like it's done well. But even that, it looks like it reached almost IPO prices before it went back up again, huh?
Yeah. Well, it wasn't that close, because it looks like it IPO'd around 50 and it went down to 100.
Oh,
So,
okay. So yeah, the chart is misleading a little bit.
Yeah. The thing with Reddit, I agree. The design is like, it's kind of crazy how unfriendly it is, but I do think the information on Reddit, like, it's very hard to get that anywhere else. Like, you have a lot of like very niche experts providing opinions, so like there's definitely value there.
Yeah, now you can get it from ChatGPT though, because apparently they scraped all of Reddit.
Yeah,
or any of the AIs basically. What else?
Someone asked about IONQ, which reported today.
Oh, you know what? Amazon just added IONQ to their stock, or to their portfolio, didn't they?
Oh, did they? I don't know.
Here, let's see. I think if the stock is up a lot today, that would probably be the reason why.
They're down, but they also reported earnings. So.
Oh, okay. Yeah, they're down aftermarket, down to 1.8% during the day, and then down another 3% in aftermarket. But yeah, this is isn't this quantum computing?
Yeah,
So several quantum computers of various qubit capacities, and is in the process of researching and developing technologies for quantum computers with increasing computational capability. So I don't know what you would buy one of their computers for, but this is like one of those things where I don't understand it, right?
Yeah, one interesting thing is the revenue chart is like they did. I'm assuming that must have been expected, being that the stock is down, but someone's buying. Someone's making purchases.
The revenue is okay. The revenue and market cap are so far apart. Like 52 million in last 12 months revenue, market cap of 12 billion. Yeah, that's just not the type of thing that I would ever invest in. And this product could quadruple over the next year, and I would just simply miss out. Fortunately, like, I don't have that kind of FOMO, which is helpful.
You can't. You just drive yourself crazy because you're never going to get the best opportunities.
Right. You know, what's great about Warren Buffett is that he has a quote for almost everything, and one of his quotes is that I don't need to make money on everything that does well. You know, I just need to make the good money on the things that I'm invested in. And I was like, I don't know. I heard that years ago, and it stuck with me. It's like, I don't need to make money on every stock. You know, I want to have fewer things, but have stronger belief in them. Right. Yeah. Anything else?
I think that is it for episode 1 of Buy Hold Rant.
Not bad. What do you think, Adrian?
Oh, I think I laughed out loud a few times, so I think there's at least entertainment value.
Okay, that's good.
I hope it was my jokes.
All right. Well, thanks to everyone for putting up with us. I don't know.
Thanks, guys.
Yeah. Hopefully we'll keep doing this, depending on the feedback we get. If you tell us to just stop, don't do this anymore. We'll try to adhere.
We'll probably do one more episode and then see how it goes.
We'll still do one.
A couple shout outs.
If you absolutely hate it, just go social media crazy. You know, Sydney Sweeney style.
Right.
Call us a Nazi. All right. Thanks, everyone.